Welcome back to The Breakdown with me, NLW. It's a daily podcast on macro, Bitcoin, and the big picture power shifts remaking our world. What's going on, guys? It is Friday, April 25th, and that means it's time for the Friday Five. Before we get into that, however, if you're enjoying The Breakdown, please go subscribe to it, give it a rating, give it a review, or if you want to dive deeper into the conversation, come join us on the Breakers Discord. You can find a link in the show notes or go to bit.ly/breakdownpod. All right, friends, back with another Friday Five here. Believe it or not, we don't just have to talk about Trump tariffs, if only because the story of this week was a little bit more about Trump backing off tariffs and Trump backing off his fight against Powell. And in the relief of pressure that came with that, we got to see some more institutional adoption stories and narratives taking place, as well as what seems like, cautiously optimistically, the continued peelback of Operation Choke Point 2.0. Anyways, lots going on, so let's dive in right now.
Good morning. Happy Friday, sir.
What's happening?
Just crypto stuff and Trump stuff and more Trump stuff. You know, it seems to always be Trump stuff. I don't think we've yet escaped the markets only care what he tweets environment quite yet.
Don't think we're going to, although I think we are getting... Actually, I have this hat. The beatings will continue until morale improves on, and I feel like I didn't mean to, but accidentally kind of picked the hat of the time.
That's amazing. Listen, before we get into the main stories, we have this sort of hyperbolic title: the crypto markets are set to explode as Bitcoin approaches 95. Well, Bitcoin, just went to 94.9, making another high in this kind of local cycle. But like I said, this is more about what's likely to come in the future. This was one of the stories about real estate market exploding to 4 trillion. I've had a lot of conversations of late about how tokenization really is going to be the future of growth in crypto. We have a lot of crypto native applications that people are likely to adopt, but really the big numbers are going to come from the other side. It's going to be tokenization and stable coins.
Yeah, no, look, I think that there's a whole slew of really interesting things that crypto could do, but these are long-term trends. So the tokenization piece, I think to some extent, one of our mistakes with it has always been to view it as sort of like a cycle hype narrative as opposed to just critical infrastructure that's clearly coming, and I think that this report and these predictions are sort of validating that it seems inevitable, right? Again, there's questions of sort of exactly how it, value accrues to the tokens that are used and all that sort of stuff. But it's absolutely the case that the economy and assets are going to be increasingly crypto economy and crypto assets, whether they look like that today or not. So, long-term trend lines are still pointing in a very specific direction.
Yeah, at the end of the day, the story really will be if that's investable or if that's just captured by a bunch of legacy institutions on their own private platforms and blockchains, and they tokenize everything and we can't participate.
Yeah, I mean, look, I think that the good news is that part of why it feels inevitable is that it creates tons and tons of interesting, unique, investable opportunities that people can play around with, right? And there's a lot of ways that gets wonky and gross and weird, but there's also a lot of ways that it just opens up sort of proxy access to different types of assets that weren't available before. And I think optimistically, it's likely to me that the market is going to find lots of ways to expand access and to expand different types of participation. Look, I think the wealthiest, most capitalized sections of markets always benefit most from new types of sort of asset exposure, but that doesn't mean that there can't be opportunities for other types of investors as well.
Absolutely. So the first major story we have, we pegged it as Trump versus Powell, but I think we could probably just put it as Trump versus, because obviously we also have Trump versus China. And I think these have been, in my mind, the two biggest stories since Liberation Day and what we should be hyper focused on, because he clearly played his hand with tariffs. We have varying results, mixed results we can discuss all around the world, but very clearly, we had two narratives that the intention was to lower rates and to force Powell to do so. And of course, to bring China to the negotiating table. At the moment that it happened, both of them seemed to call his bluff, whether it was a bluff or not. They definitely called. The question now is how that's evolved and what's going on. So we obviously know that with Powell specifically, that we'll talk about first, Trump called him a major loser, said he was going to fire him, said that he was incompetent, all these things. Now, obviously, walking back a lot of that rhetoric after he saw what it did to markets, in my opinion, and saying he has no intention of firing him. Yes, we should cut rates, but I'm looking forward to working with him. The usual backtracking on the aggressive rhetoric.
I think that the couple things. So one of the challenging things to figure out for everyone when analyzing Trump is like, so he calls Powell a loser, tweets about him a bunch of times, but then in the next breath says that he has no intention of firing him, right? And so the natural kind of human instinct is to be like, all right, well, he walked it back. But what if those things actually just aren't mutually exclusive for Trump, where he could call someone a loser while also actually not intending to fire them? I think that the thing that's hard for markets to wrap their head around is that Trump seems sincere when he says, no, of course, I'm never going to fire him, because he just wants the punching bag. He wants to have someone to blame. But in any case, it is certainly the case that markets did not like that being sort of like the new source of antagonism and acrimony. They were getting real jittery based on that for a variety of reasons, I think. And so, again, whatever the proximate cause, however much intention there had or had not been around firing, there was clearly a softening of the rhetoric, not just around firing, but also around the Fed in general, that markets responded very positively to when it happened.
Yeah, it's sort of an interesting debate that I've had with other guests, but a lot of people saying, obviously, if he fires Powell or continues that rhetoric, markets are going to crash because there's a lack of faith in the dollar and a lack of faith in American institutions. Dave Weisberger and others I've seen take the other side. They're like, well, if he actually found a way to fire Powell and people knew that he was going to bring in a really dovish commissioner, then you imagine markets are going to go up because the Fed would be controlled by Trump and do exactly what he says. But I take the former argument.
Yeah, I think that the markets are quite good at finding ways to be cynical for the sake of short-term gains, but I think that one would really challenge even even these markets' ability to sort of trade the short term for the long term.
So really quickly, now going to the China side as an update. Trump says he spoke with China's Xi. Trump says trade deals are going well. Trump will end up with lots of good deals. Trump says Russia, Ukraine coming along. Then literally 45 minutes ago, China, U.S. not having any talks on tariffs from Chinese embassy. U.S. should stop creating confusion. Chinese embassy. What the hell is going on here?
No,
I mean, you never know from China.
No, it's yeah. I mean, look, I think that it's basically what people are doing now is they're mostly using what comes out of Trump's mouth, not to understand where things stand, but to understand where Trump stands, and then try to sort of from there extrapolate that to what might be going on. So Trump talking about deals coming along with China and intent is not about him having had a bunch of conversations. It's about where his head is at relative to the conversations that, will be held. That is confusing, but it's also, I think, fairly clear to American observers. That's sort of the way to interpret a lot of Trump's statements. Let's put it this way. More than most presidents, his statements are leading indicators rather than lagging indicators when it comes to stuff that's going on.
Yeah, I think it's also fair just to show this one article. Trump was warned of empty shelves and financial turmoil from tariffs and firing Powell. Of course, this is from CNN Business, so maybe it's a hyperbolic title. His U-turn pushed stocks higher. We just discussed this, obviously, but there are reports from multiple sources that Wall Street called and they were not happy.
Yeah, I think they've been trying to dramatize how unhappy they are for some time. Again, it's very hard to tell. Let's put it this way. I'm fairly uncomfortable calling U-turns, with any sort of real conviction. I think we're still in an incredibly volatile scenario with a lot of moving pieces where, all we know that right now is that it's everyone's a little happier than they were on Monday. And I'll take that W heading into the weekend. Today's episode is brought to you by Crypto Tax Calculator. If you're looking for accurate crypto taxes with no guesswork, check out Crypto Tax Calculator. Get accurate CPA-endorsed tax reports with full support for IRS rules. For those who have fallen down the on-chain rabbit hole, CTC has you covered with more than 3,000 integrations. They have full support for DeFi, staking, and NFTs. Import directly to TurboTax or H&R Block or share securely with your accountant. Create an account, import your sources, and review. It's that easy. Hello, friends. I am thrilled to share that Ledger is once again partnering and sponsoring with The Breakdown. Many of you know, but for those of you who don't, Ledger is the most secure hardware wallet for your crypto and logins. It's trusted by 7 million users and secures 20% of the world's digital assets. What's more, Ledger is a lot more than wallets. Over the recent years, they've built a comprehensive ecosystem of products and services, all of which are designed to make digital ownership more secure and accessible. You can buy your Bitcoin with Ledger and Ledger Live, and so much more. Basically, not only do they want to keep your assets secure, they want you to be able to do more with them. Ledger's newest devices, the Ledger Stacks and Ledger Flex, introduce the world's first secure touchscreens, making it easier and safer to manage your transactions and assets. Alongside Ledger Stacks and Ledger Flex, the company also launched the Ledger Security Key app, offering a safer alternative to traditional passwords and enhancing your digital security. If you are in this space, you owe it to yourself to at least check out Ledger and their ecosystem, what they have available to you. So thanks once again to Ledger for sponsoring the show.
So the next story, and one of the biggest ones certainly of the week, is obviously what's happening here with Cantor Fitzgerald, Tether, SoftBank, et al. Of course, we first got the report that we were going to get a MicroStrategy/strategy/Sailor competitor in this company called 21 that was going to launch a Sailor-like fund with 42,000 Bitcoin. Then we got the news a day later, I believe, that Jack Mallers was going to be the CEO, which I think obviously gets the Bitcoin community pretty pumped. He's the only guy who can go on TV in hoodies and a t-shirt and a hat, kind of turned to the side and apparently have credibility. It's actually pretty amazing to watch him work. But this is big news. First of all, it's another institution saying that what Strategy doing is a viable opportunity to gain more Bitcoin. It's confidence that there's going to be enough investable, enough people interested in investing in another vehicle like this, in this kind of convertible debt, buying Bitcoin. But I think what's most notable to me is who's in the partnership. So obviously Cantor Fitzgerald, not a huge surprise, knowing where Lutnick stands. Tether and Bitfinex, clearly not a big surprise. But SoftBank coming in with 900 million Bitcoin is the real story here, in my opinion, because either they had it and we didn't know, or they've been buying it to participate in this. Also, we obviously just have this being slightly structurally different than the strategy, so to speak, because Mahler's gone on TV and has said basically, we're worried about Bitcoin value per share. We're not going to trade at a premium to NAV, which, by the way, I don't understand how they can earn a yield without doing that. But basically saying this is going to be a safer version of what Micro Sailor is doing.
Yeah. I mean, hold aside the specific kind of financial engineering dynamics, because I think that's maybe for many people will be interesting. I think for our purposes, kind of at least from a zoom out perspective, it's the least interesting thing. There's a lot of, I've loved this story this week. One, because sort of on the face of it, it's clearly positive, more institutional interest, more excitement, but it's also shown, I think, around the discourse, how robust the adversarial thinking of the Bitcoin community continues to be, because this was not just a full on cheer sort of response. I think you saw a whole variety of things. You saw some folks who are just pure cheering and basically say Mallers is the type of person that we're really excited when he gets more rather than less power, and we like those folks having a big stack. People have been excited about the fact that there does appear to be sort of like more accumulation happening here. People have been excited about SoftBank. One of the really interesting points I think that people have made is that even though Masayoshi Son has really taken a hit and had a hard time on his previous Bitcoin investments, he's sort of decided not to take, to deal with the psychological hit of how much more he could have had and wade back in, which is a positive. But then on the flip side, you have people who have been quite nervous about having another, highly powerful kind of, accumulator in the space, the potential trend lines that indicates. There have been people who are questioning sort of, how much this is Tether just trying to find a US regulated institution that they can kind of do what they will with. None of which is to say that those are the right ways to look at it. But it's fascinating to me how much conversation an otherwise sort of just very, kind of on the surface of it, positive thing, has brought up.
Yeah, and we have this kind of blockchain, Long Island iced tea blockchain, whatever it was, element to it, where your stock flies. If you mention Bitcoin right now, Cantor skyrockets 130% as traders FOMO into the stock on Bitcoin SPAC frenzy. And I think you're up another 25% pre-market right now. This thing is going absolutely nuts on this news.
Yeah. No, it's I think obviously the net people are pretty excited about this.
Yeah. Okay. So the next story that we have here is about the European Central Bank, everybody's favorite institution, but the Commission versus the central bank, arguing apparently about Trump dollar and stable coins. This is one I have not deeply unpacked, but I do love this headline. Commission livid as ECB warns of crypto apocalypse under Trump. I mean, let's go.
Yeah, I mean, so we had touched on this story before, where Europe is getting increasingly freaked out about the stable coins as a destabilizing force for the euro. I think that's being exacerbated by the fact, just by the sort of the presence of the Trump administration. But it's also being complicated by the fact that within Europe there is not a lot of consensus here. So two different groups, the ECB and the European Commission, brought different reports on these issues together, and they completely disagreed with each other. So there's internal squabbling. There's sort of external nervousness. I don't know. It's a get your popcorn moment for all of us over here sitting on the dollar, but. I think that the other piece of this is that US politicians are now officially adopting the recognition that stablecoins are a tool of expanding US dollar hegemony. So it's not like the Europeans are coming from nowhere with this. There is some intention here.
Depending on what Asia does and how tariffs go, there's a world where stablecoin issuers are the number one buyer, or certainly top three of United States treasuries.
Yeah.
So hard to argue that they're wrong in that perspective, considering that somebody's going to have to buy these things, and that's definitely going to be stablecoin issuers. Speaking of stablecoin issuers and crypto companies based in the United States, it seems that in advance of likely legislation on stablecoins, we are getting a whole lot of institutions trying to get banking license. So we got the Wall Street Journal here. Crypto knocks on the door of a banking world that had shut out. Circle, BitGo, and other crypto firms plan to apply for bank charters or licenses. Coinbase apparently going for it. Here you go once again. Circle, BitGo. I don't know why I can't say that. And others. And then you have stablecoin turf war, Bank of America, Tether, and Circle battle to shape U.S. rules. So this is, we all know that they're all lobbying and trying to get what they need into the bills. And then, of course, Citigroup predicts stablecoin supply can hit 3.7 trillion by 23. By the way, there's more. You even have the Bank of America CEO bullish on stablecoins. We'll get into that business. It's never-ending talk on stablecoins here, but perhaps the story worth double-clicking on is the banking charters, because that, to me, tips the hat as to what they think this legislation will look like and what will be required to compete.
Yeah, I think there's a combination of things going on. I think one, crypto institutions have had a long-term interest in sort of the opportunity, like basically moving on over into the traditional financial and banking world vis-a-vis bank licenses. It got, obviously sort of stumbled and held back over the last couple of years with Operation Choke Point, but this is not like sort of a new ambition, right? People have recognized that a lot of opportunities open up, and crypto institutions are ambitious. They don't want to just be the biggest thing in crypto. They want to, use crypto to take over the rest of the economy. So I think that's one part of what's going on. But certainly I think that the flurry of activity that we're seeing is reflective of the potential that the way that this legislation goes with stablecoins is that you have to have some version of a bank charter, whether it's a limited version or a complete version, to actually participate in this game. I think that's certainly the proximate cause for this amount of activity, and is validated by all the banks wading in as well. So people are gearing up for what they perceive as one of the big important competitive areas, which is stablecoins. And it looks as though, I don't even think that it necessarily means that they think that for sure banking licenses will be required. I just think that based on where things are, they think there's enough of a chance that they're taking it real seriously.
Yeah, I mean, if this could be there, even if they only view it as a 5 to 10% chance, get that banking charter, it can't hurt, right? And we know Kraken has a banking charter actually in the state of Wyoming. They're not one of the ones listed, although I think it's very narrow rules as to what they can do. But it would make sense for basically every exchange in the United States to get their own bank, even outside of the stablecoin legislation, to get their charter just so they can't be debanked by a future administration.
Yeah. Yeah, absolutely. I like, it's one of those things that makes a lot of sense to try to take advantage of a friendly regulatory period to try to lock in some advantages and value that come from that.
And then the next story, speaking of Operation Choke Point 2.0 and issues with banks, we have the Fed joins OCC, FDIC, in withdrawing crypto warnings for U.S. banks. Here it is directly from the Federal Reserve. Federal Reserve Board announces a withdrawal of guidance for banks related to their crypto asset and dollar token activities and related changes to its expectations for these activities. Interestingly, I saw a whole lot of tweets from the industry saying, we won, it's over, we did it. And then a whole lot from the other side, the Caitlin Longs and others, saying the Fed is still a part of the anti-crypto army. Don't believe this. They're still coming after us.
Absolutely. I mean, Look, I think that the signals are positive when it comes to what's happening publicly, but at the same time, there's clearly some challenges that are happening as relates to what's going on behind the scenes. So, be cautiously optimistic, but also listen to the people who are dealing directly with the folks there.
Yeah. I mean, that's really the final story that we have for the day. I think in general, everybody's just kind of holding their breath as usual and waiting to see what price does, because Bitcoin's at one of those levels where a meaningful push at this point could kind of give people confidence that the nonsense is over, at least for crypto. But man, it's hard to get super excited when you see those kind of tweet storms and news storms back and forth between Trump and China and others. I just think there's going to remain a lot of uncertainty and volatility for a while.
Certainly how it feels to me. I think we celebrate the short-term wins, continue to position yourself defensively, be optimistic where there's room for optimism, but I think it's going to be volatile for as far as the eye can see from where I'm sitting.
Yeah, I agree. All right, guys, give NLW a follow. Check out the breakdown, of course. I'm not sure I'll be back next Friday with the Friday Five because I think I'll be traveling, but maybe you'll do it. You don't need me.
Yeah, we'll see. All right.
I'm not required here. Let's be honest. All right, everyone. We'll see you on Monday. Thanks. Bye.
Cheers, guys.